Welcome to Phil's Gang, my YouTube channel. My name is Phil Grandy, okay? Well, this is the unfolding of the stock market crash, and boy, it's unfolded, hasn't it? Let's just get started, okay? All right, first of all, I want to thank you for joining me tonight, and please, during the presentation, if you like it, hit subscribe, like, and share. I really appreciate it. Also, we have a stream live every day, of course, on YouTube and Rumble. And click the Get Started link below, all right, to sign up for your free 10-day trial. And make sure you click where it also says you're signing up for the Working Investor Program. So you want the Working Investor Program, okay? All right, for 10 days, you're going to get my color-coded chart, and you get all the access to our portfolio and teaching and so forth. All right, let's get started. A lot to talk about tonight. All right, first, a quick history lesson, okay? 2008, the market crashed. We lost $10 trillion worth of assets, okay? The value got wiped out, housing, and also stocks, 10 trillion. But what they don't talk about is they kept a little dirty secret. Another 5 trillion to 7 trillion got wiped out. What's that? Everybody says. Nobody talks about it. Those are the assets of the super rich, the 1/100th of 1 percentile. Those are the assets of exclusive real estate, fine art, rare coins, gold, diamonds, precious metals, titanium, platinum, stuff that we don't get our hands on, okay? They make a fortune on that when there's inflation. Now, when the market crashed in 2008, they had to make a decision, okay? Go into a recession, which would take 2 or 3 years, 4 years to get their money back, or to screw Main Street. Remember, recession helps Main Street and the rich. Or they said, let's screw Main Street. Let's just take care of ourselves, the rich. And what we're going to do is we're going to switch from value stocks, the oil companies and healthcare and banks. Let's get out of the value companies. Let's go directly to growth companies, because growth companies, we can grow them very fast because they don't need profits. They don't need profits. All they got to do is print money, drop the yields down, and tech stocks will just keep going up and up and up. As long as we can print money, we can drive tech stocks up, and that inflation from all that printing will drive up our assets, and we'll get very, very wealthy. At the same time, all that printing of money is going to destroy the dollar, weaken the purchasing power, and that's going to help us with our debt, because when we pay our debt back, we're going to be paying it back with weak dollars. It's also going to help the Congress, because they love paying back with weak dollars. If they owe China $1,000 and the dollar's weak, now they don't owe them 1,000. They're only going to owe them 800. That's what they love about inflation. So Congress loves inflation. The very wealthy loves inflation. The only people who get screwed is Main Street. Okay. 14 years go by, they pushed the market up to where we are today. Okay, so you know that story. We only had a couple hiccups on the way. 2018, when the market dropped about 20%, which I predicted would happen, and 2020, which we dropped 31%. Okay? All right, now, here we are today. I drew a little plan for my members this week to explain to them what the market was going to do. And please remember, that was before this developed here. That wasn't there. And I told them what was going to happen, okay? In fact, when I drew this plan, okay, I said to them, what we're going to see is we're going to see this go up. The media is going to grab everybody's attention this week and tell them everything's fantastic, everything's wonderful. And then they're going to make sure that people get hope, and they get their optimism up, and they get their belief up, and they're going to drive this guy up right here. It's going to be a sucker's rally. Going to drive it up to where they get so greedy at the top, okay, they won't get out. And what's going to happen to them, all of a sudden, it's going to pull back. And it did. That was today. It pulled back. And I said, then they get into denial. Oh, no, the market's going to go back up. Don't worry, it's going to go back up. And then when it doesn't go back up, you see it right here? Fear. And that's where we are next, fear. Okay, this is going to go up a little bit this week, turn and come back. It's going to finish. It's going to look like this. It should go back up this week like this, a little bit, going up like this a little bit, right? Just like what we have here. Going to go up a little bit like this, turn, come back down like this, just like I got here. That's what should finish this week. This should prop up like that, finish just like that. Because what's going to set in is this. They're going to get in there, and the fear is going to set in. And then when they realize they got a high, a lower high, a lower high, and a lower high, and it's not going to go up anymore, and it's going to start coming back down, panic is going to set in, and everybody's, get me out, get me out, get me out, and then you're going to collapse. Now, that's going to happen. The only way it won't happen, okay, is if the very, very wealthy turn around and say, you know what, we want to get back to our trends. Okay, we want to get back to the trend. We want to get back to where it was. We want to get back up into this. We want to make money again. Okay, we want to make money again. And so we want you, Powell, to drop rates again. Tell everybody you made a mistake. You're not going to raise rates. Okay, you're not going to sell 10-year treasuries. And what you're going to do is you're going to get us back up into here. Okay, and then we'll keep continuing on our way up. We'll just do what we've always been doing since 2008, print money, buy treasuries, drop yields down, push the stock market up, and we're going to get rich while Main Street gets poor. Now, if they decide to do that, that's a real problem, because I'll tell you why. But to try to get from here up to here, they're going to have to print so much money. Okay, the inflation will be brutal. And the bottom line will be, let's say they get us up there, but it'll take about 6-7 months, but let's say by October, November, what's going to happen is, you remember what happened in 2008? In 2008, the market crashed because people said, wait a minute, I don't have enough money to pay gasoline, my car payment, and my mortgage. One of those I got to get rid of. And remember what they did? They got rid of the mortgage. They just got the gasoline, they got their car to go to work. All right, what's going to happen here is if they decide to go back to what they've been doing for 14 years and screwing Main Street, and Main Street gets screwed because when you have all kinds of inflation, you have a weak dollar. Poor Main Street, they don't have any assets. They're dead. Okay, and they may do that, but if they do that, they will be well aware, and they know this. They do that, Main Street will never come back. Not going to be like 2008. Why? Because the inflation will be so high, the dollar will be so destroyed, and the rich will be so wealthy. The problem for Main Street is they won't have to make a choice of, all right, I got 3 items, gasoline, mortgages, car payment. I can pay 2. Which one do I let go? If they do this, he can't pay the mortgage payment, the car, he can't buy gasoline. That's right. That's how much they're going to destroy this economy. And they may do that because they don't care. Pelosi doesn't care. They don't care about you. Okay? And remember, the inflation is so huge now that their assets keep going up in value. Okay? So we got to wait and see. So what we're going to do right now is next week, we're going to wait and see what happens. Okay? Are they going to be able to take out this low? This is all right here. So what we got to watch. And as I said to you, I think what's going to happen is just what I drew here. I think we're going to see this. Okay? Like I showed everybody, right? Where this is going up like this. She's going to come back down like it did here. Then she should go back up here, and then she should come back down. That should be the end of it. But it's up to the bad guys, okay? But it doesn't matter to you or me, because you know what? If they decide to run it all the way back up, we'll make money. But if they decide no, and it's going to drop, we're going to make money shorting. And that's what we got to do for you. For you people who are not members, we got to get you to a point when the market drops and crashes, you're making money. And we'll get you to that point. I promise you, we'll get you to that point. You got 10 days free. I got 10 days to get you there so that you'll finally say at the end of the days, wow, I wish I did this years ago. I'm now making money when the market goes down. Okay? And you'll have fun with it. Okay, well, that's it. So let's see where we are next week. All right, we've come a long way in here, haven't we? And I don't think we've been wrong. Okay, and it's not important whether we're right or wrong. The important thing is where we end up. Okay, remember, markets always do what they want to do, but never when they want to do it. And remember, when the market opens, lose your opinion. That way, you won't lose your money. Okay. All right. See you on the chart.